Hey, welcome everyone. Tom Alonji here, CEO of Park Avenue Trading. For those of you that know me, I want to wish you a good hello. For those of you that don't know me, I'm a retired chief Forex trader with over 35 years experience, international banks in New York. Yeah, I'm a little bit old, as you can tell from the gray and the no hair. I have extensive trading experience in foreign exchange and some commodities. So before we get into the nitty-gritty, what we're going to be discussing here today as the nitty-gritty, we're going to talk about Forex brokers. And I'm going to take you back a little bit and describe exactly what's happening here in this video. It's really cool. It's nostalgic for me. Brings back a lot of memories. This is circa 1988, basically when I started in this business. And this is Harlow Meyer Savage, a brokerage in New York. But before we get into that, I'd like you please to take a moment to hit the like button and the subscribe button, because Google loves that stuff. It's going to help me out a lot. It helps me gain some subscribers and also help you so that you don't miss out on any valuable information that I throw out. Okay? It won't be earth-shattering stuff, but I'm sure it will be valuable for you. Okay, so before we get into this video here, the one thing I have to understand about Forex brokers, at one time, Forex brokers were, a live group of people, okay, just like stockbrokers. They didn't have any central location that they went to. They worked in different cities throughout the world, and this was the New York spot desk. So spot desk is 2-day delivery. If you're a newbie to this stuff, that's not really important. We're just going to talk about brokers, because if you're asking like what broker should I get, you're probably kind of a newbie. But so what you're going to see here is I believe this is the dollar yen desk, and there were different rooms that had the different major currencies in them. They had the yen, the Deutschmark, the Swiss franc, the sterling, the British pound. Okay, and what they were just a circle, and you're going to see this is going to be a circle of guys and gals, and in front of them is going to be these speakers. And what these speakers are connecting to the banks. So I was at CRT Bank in New York. I had a broker, and I had a direct phone. I would pick it up and say, Steve, give me dollar yen, please. What's dollar yen, please? And he would give me a price, and I could deal. Now, basically, I could also listen to the marketplace off of a squawk box. So I had several different squawk boxes embedded inside my desk with all the different brokers: Lasser Marshall, Harlow Meyer Savage, Beer Bomb, Intercontinental Exchange Brokers, which was ICE, Tullett in Tokyo. You name it. I had a few different brokers that I would listen to and I would do business with for dollar mark, for dollar yen, sterling, Swiss, all the majors. And now they used to have also what they called the minor desks. So they were a circle of guys, okay, with all different batteries of phones coming into them from different banks. And, there was also the cross currencies, the sterling mark, sterling yen, mark Swiss. Now, I'm naming currencies. The Deutschmark no longer exists, obviously, because it's the euro. But I'm talking about the time, 1988, before the launch of the euro and all those little other currencies got wiped out. So the Italian lira is gone, the French franc is gone, the Portuguese escudo is gone, all that stuff, because they all went into the euro. Okay, so let me start this video up. I think it's really cool. Like I said, it's really nostalgic for me. I'll put the link in the bottom. Don't forget, hit the like and subscribe for me, please. And we'll take it from there. Okay, we'll take it. Let's go. Let's start it off. Okay, so what you're hearing right now is them screaming 47.9, 47.9. They're saying 47, 49. 47 is the bid, 49 is the offer. So in dollar yen right now, 47.9. They won't say 49 because it's just too long to say. They say 47.9, 47.49, bid 47.49 offered. What do you pay for? He's saying, what do you pay for? Okay, so he's basically that guy that's standing up right there runs this desk. Okay, so he's like the head broker. Okay, yours. That's somebody just sold again. Yours. That's how you used to say when you wanted to sell something. If I would pick up the phone right now and be talking to that gentleman right here on the phone, and he'd go 40. I asked him, what's the price of dollar yen? He'd go 47.9 for small. Yours. So basically what I'm doing is I'm selling. We use the word yours to sell and mine to buy. Okay, so that was when we went to the hit a bid to sell, we go yours. So we thought something was worth less. Okay. Okay, so there you have it. That's what foreign exchange sounded like back in the 1980s, 90s, up to 2000. Actually, it really sounded like that from 1973 all the way to 2000. So the brokers had a really good run until 2000, 1999, 2000, when the EBS machine was launched by another company, electronic brokering. And that machine actually talked. So you had a box in your trading room that's, you could pick a voice, British voice. You could pick, I don't know, different voices that you wanted. You wanted a female broker, you wanted a male broker, you wanted to be British, you wanted to be American, whatever you wanted them to be. And the thing would talk. It would say 35, 37, 35, 37, 35, 7, 35. It would never say 7. It would say 35, 37. And it was very fast. It wasn't like a human being. But the reason why the brokerage actually turned into electronic and got rid of the voice brokers was because of the cost. With the machine, basically banks are now inputting prices and the machine is just reading the prices. With the machine, you don't have insurance, you don't have person coming in with a hangover or a bad attitude, anything like that. Just basically, it's just a machine and it's much, much cheaper. So they were able to lower the commissions down to like ridiculously small for banks, and all banks said, well, I'll do business with the electronic machine because why would I want to pay, $5 a round turn per million when I could pay, $1, so that's why brokers disappear. So anyway, we're here to talk about, what we consider the nitty gritty, which is, how to pick a Forex broker, and probably, really, I don't really have that much to say about it because in reality, what you should be doing is you should be looking for a reputable broker. Now, a reputable broker is a broker that is regulated in the United States by the NFA and the CFTC, Commodity Futures Trading Commission, and the National Futures Association. Now, overseas, they're regulated by the FSC, the FCA, and Cyprus Securities, CYSEC. So those are the ones that you should be looking for, okay? In the States, 3 good brokers, actually a couple of good brokers that you could work with is Forex.com is by far the biggest, okay? Then you got Interactive Brokers, which is a great broker, and then overseas you got Dukas Copy. Now, what I'd be looking for in a good broker. Now, I'm going to say some things that really don't make a difference to me at this point, but they'll probably make a difference to you as somebody that's looking to open up an account. Okay, and the first thing you should be looking for is good spreads, right? You want good tight spreads, and commissions are also important, but tight spreads and commissions are probably what you're really looking for in your broker. And then the third thing is the platform itself. Is the platform a user-friendly platform? We'll get onto that in a second. But you got to realize one thing. With a broker, if you're going to get really tight spreads, commissions are going to probably be a little bit more. And if you're willing to give up a little bit of the tight spread, commissions are going to be a little bit less. So this is something that you basically have to figure out in your own mind exactly. What do you want? Do I want really tight spreads and I have to pay a little bit more in commission, or do I really not so concerned if the market's 11.5 and they're at 12, or if it's 11, 12, like that 0.0005, does it really make a difference to me? And then I get a little bit less in my commission because the spread is a tiny bit wider. Because either way, you're going to pay for it. All right. What it comes down to is that brokers have to make money. They have to actually pay for all the things that they're giving you, and they're giving you a lot of things today. And I'm going to get into that in a moment as well. But see, for me, spreads aren't really that important, because I don't really care if something's 11 bid or 10 bid and 12 offered or 13 offered. Okay, the 1 pip difference for me makes no difference, because I'm trading from a point of where I'm looking to get 60, 70, 80, 100 pips out of a trade, or possibly more. I really don't care about, the point, the 1 pip or the half a pip or 2 pips to enter a trade. It makes no difference to me. If I want to sell something, I'm going to hit the bid. I don't care if it's 9 or 11. I'm not thinking like, wow, I want to get out at 7, or I want to get out at 8. If I hit a 9 bid, I want to get out at 8. That's not what I'm thinking. I'm thinking like, I want to get in the train, and I want to get in now. If I want to get out of something because of a bad trade, or if it's not working, I don't really care if somebody's offering me at 51 or 50 or 49 or 53 or 54. I'm going to just escape the trade. The 4 pips don't make a difference. That's something that you have to put in your head. Like, if you want to get out of something because it's not working, just get out. Okay, I was taught this very quickly when I was working in the bank. My treasurer made it very, very clear, my direct boss, like, if you want to get out, what the F is the difference if it's 51 or 53? Just get out. Because what if it's now 60, 70, 65, 70, 75, 80, 90 offered, paid, and you didn't get out, and now instead of you're trying to save 2 pips, then you have to chase 40, 50 pips out of the money. So if you want to get out of something, don't start haggling in your own mind like, well, it was just 49 offered, now it's 50 and a half offered. I should wait till it goes to 49 offers, because you're not going to take the offer at 49. If it goes 49 offered, you're going to say, well, it was just 47, so I'm going to wait. And then that one little instant, it could go 53 bid, 55 bid, 60 bid, and just run, okay, away from you. So don't haggle in your mind, Yeah, and I can understand like why people look at like spreads, and why they look at these things, because it's human nature to want to get a bargain. That's what it comes down to. We all have our relatives basically that they're the ones that always are able to go into a car dealership and get the lowest possible price ever. Okay? They're also the ones that have the used car in the family, a 1968, Dodge Dart with its wheels falling off, and the all interior is all ripped, and basically the car doesn't start. Yet they sold it at a premium, so they say. Okay? So people are really big on getting bargains, and also they want to sell at premiums. They want to. It makes humans feel good. Like, I got a deal. I got a really good deal on this. And I also, I'm the one I sold that at a premium. What? Okay, so it's an ego-based thing, and you got to get over that. You just basically have to come up with a medium in your mind that it's okay to pay a little bit more in commission, or I really want a tight spread because it makes me feel better. So I'm gonna basically have to pay. I want a tight spread, so I have to pay more in commission, or the spread doesn't make a difference, so I pay a little bit more the other way. Either way, it's you're gonna pay. That's what it comes down to. So let's see, the commission structure. Yes, commission structure is important. You should really look for the commission structure too, because like I said, all reputable brokers are kind of like the same. They're not going to be that much different because they're competing with one another. And so they're going to be relatively the same. And that's all I got to say about that. So now the platform. The platform should be user-friendly to you. It should be a platform that, it just comes natural to be able to deal off of for yourself. Or if it doesn't come natural, you got to work with a little bit. That's fine. So what I would suggest is to anyone is that you would open up a demo account, okay? And I'm not talking about a demo account to mentally masturbate trading. I'm not saying that. What I'm saying is you open up the demo account so that you can learn the platform. There's no way that you want to start trading without understanding what the platform is. And I say it, I know it sounds like why would you even say that, Tom? That's kind of stupid. I've seen people do it. They have no idea how to work a platform. They just throw money in there and they just start, okay, I'm going to buy or sell this. And then they don't know where to get out. They don't know how to work the platform to get out. No, you don't want to do that. Absolutely do not want to do it. And, you know, that's not something that is really positive for your account. So you got to understand how to work the platform. You got to understand how you put your stop loss orders in. And a stop loss has to be put in before, you know, you execute a trade. Okay, so remember that. I mean, get in the habit on your demo platform. If you're going to make a fakey trade, you put your stop loss order in first. Okay, that has to be done. Then you execute your trade. You should also look for a platform that basically has all the studies and the indicators that you want. Okay, now most Forex brokers have every conceivable study that you could want. You know, you got RSI, you got moving averages, you got alligators, you got zigzags, you got stuff that I never even heard of in 35 years of trading that are on these platforms. Okay, so if you're into like taking your chart and putting all those indicators on there and all the spaghetti strings all over the place that you can't even see the price chart itself anymore, then you need to find a broker that offers all those things. Now, here's the skinny on all that stuff. All that stuff is not really going to help you become profitable. You know, RSI, MACD, all that stuff is not going to help you become profitable. What really makes you profitable is your trading system and your trading philosophies. And you'll come to that conclusion. You know, I don't use anything on my charts. And my charts are just straight up price. That's it. You know, no MACD, no RSI, no stochastics. And I can tell you stories about RSI and Wells Wilder. Okay, I've talked to Wells Wilder before he passed. And in the 1990s, I used to have conversations with Wells Wilder, and he's the guy that developed RSI. But I don't touch any of that stuff anymore. And like I said, you'll come to that same conclusion. So there's another thing that you need to know, and I think is important, okay? And I have my little notes here that I'm referring to. So I talked about the platform already. I talked about the indicators. Okay, so yeah, I want to talk about some things that I think that need to be debunked, okay? And let me just get my coffee over here. Pull this out. Okay, nice little coffee in the morning. Always good to have. A little bit of a sissy type of glass, but my girl gives this to me because it's like almost like a gallon size, and I need lots of coffee. Get going. Back in the day, all right, everything for trading was basically what was like a la carte. Okay, so you know you had different news services that you had to pay for. You know, you had Reuters, you had Knight Ridder, you had Bloomberg News Services. You know, you had all these different, you know, indicators that, you know, like software packages that you had to buy for your PCs and things like that. They didn't have any of this stuff that was like on one platform. You know, if you wanted a moving average on your chart, you had to buy software for it, or you had to have somebody come in and program it for you. Okay, and that costs money. So we're talking about back in the day. You know, you're looking at $30,000 to $40,000 a month in news services. Okay, now I remember I had to get CQG. I liked Chicago Quote and Graphics for my charting. It was a fantastic charting software package, and I had to then buy data from the Chicago Board of Trade in order to feed my charts. Right, so that data alone was $6,000 a month. Okay, so what banks should do is they say, okay, all the traders need all these different news services. So they took a big, they figured out how much everything costs, and then they divided that amongst all the traders, and they put that into your P&L. It's like, in other words, so let's say if you had to make $6 million for the year, that included basically all the news services. It also included your insurance and, you know, your seat, everything. They basically broke everything down to like, what does it cost us to have this person in the trading room, for salary, to insurance, to the news services, to the computers, to the lights, everything was calculated there. And then they would say, okay, well, it's costing us $3.1 million. Well, we want $6 million from the guy or the gal or, the trader. So this day and age, man, you got to be really careful with the guy girl stuff. I'm old, man. Unfortunately, I just go with that he stuff all the time. And maybe I should just write a book and just put the she pronoun in there. Maybe I'll do that to help pre-program my old brain, That's another topic. But anyway, so if I was looking into the future right now and I saw what you have on your platforms, I would be green with envy. Because I'd be like, what are you talking about? They don't pay for like that news that comes on the bottom. They don't have to pay for the charting. Like the charting package is like just there. Wow, I'd be like, wow, it'd be unbelievable for me, And so today really is like it's the best time in the world to be able to trade, as long as you know how to do it. It's the cheapest. There's volatility, stock indexes has never really been higher, so there's a lot of volatility there. It's a really good time to be able to go into this vocation as long as you're educated, okay? Because if you don't know what you're doing, you're going to lose all the money that you put in. Statistically, it's going to happen, okay? And I'm not saying it to scare you away from it. I'm just saying really think hard about this. Get some education, whether it's from me or if it's from anybody, that just get some education on money management and, risk control, and have a good philosophy. Have good philosophies when you trade. Okay, so, and now, contrary to public opinion, brokers, they go out of their way to provide their traders with everything they think that their trader needs in order to be successful. Brokers are not your adversary. Reputable brokers are not your adversary. They actually want you to succeed. Now, people say, "Oh, my broker screwed me," but your broker didn't do anything. You did it. Okay, you have to take responsibility for your trading, no matter what. Even if the broker, like, it's your responsibility. You know what I mean? Like, that's what it is. Okay, there's always, the buck always stops with you, the trader. That's it. You can't be going to blame somebody else. So, a broker basically is not your adversary. They offer every conceivable tool. They offer educational services. They offer seminars. They do whatever they can do to try to make you successful. They want you to win. They don't want you to lose. Now, an unreputable broker is one that's going to want to take your money, doesn't care about whether or not you win or lose. They just basically want your money, and they're going to probably close down in a couple of weeks anyway, so it doesn't make a difference. All right, so a reputable broker wants you to win. Why? Why do they want you to win? Because their business model is designed for you to win. That's not the right wording. Okay, their business model works on winners, because they know that if you're a winning trader, you're going to continue to trade. If you continue to trade, you continue to generate more commissions for them. The more commissions you generate for them, the more they can offer the demo platforms. They can offer all the different studies that you want. They can offer all the charting packages and all the news. You remember, they have to pay for that stuff. Okay, they're paying for it. They're the ones that are paying for the news services for you. They're also paying to have all that stuff on some mainframe somewhere that you can go and access and use. This costs a lot of money. So therefore, they really want you. They're doing everything they can do for you to win, because they want you to stay a trader. Okay, so that's important. Now we're going to talk about I'll give you an example. For me, all right, I have this written down. I should have said it a little earlier. I just kind of skipped over it. So, like for myself, like I have a broker. I'm not going to mention the broker's name, because I don't want them to be calling me today like, why'd you put that in your YouTube video for? Like, why'd you say something like that? I have a broker that offers me really great spreads, sometimes choice prices. Now, what does choice price mean? A choice price means that you could buy or sell at the same price. So instead of having a bid offer spread, there'll be one price, and you could sell or buy on that one price. It's called choice. Okay, so dealer's choice. Instead of yen being, looking at the dollar yen screen right now, 149.31. We had actually a fabulous call in dollar yen a few days ago. We got long at like 147.32. With a stop at 147.19, and we rode that shit all the way up to 149.57. Just sold it yesterday. Great trade in the trading room, documented. Okay, we don't play games over here. We document everything on Telegram. Anyway, so it's 149.32, 33, 1. 149.32.5, 149.33, 1. Okay, so a choice price is 149.32. Buy or sell off of it. Great. Okay, so you don't have to. There's no spread. It's just one pip, one price. Okay. There was also something way back when, and these brokers will not do that. Only traders could do it. They would offer what's known as an inverse price. Now, inverse price is where you put the offer where somebody could sell, and you put the bid where somebody. You put the offer. You put the offer where you would inverse the price. So let's say, for instance, if I want to be like a jerk, and I thought that I was like the cat's meow. If price was 33.34, I would say 34.33. So I'll buy at 34 and I'll sell at 33. So in other words, I'm buying higher and I'm selling lower. So people go, yours mine, yours mine, yours mine. Like they would go back and forth. They just scream, grabbing, offers. If they wanted to buy, they're getting them cheaper, So why a trader would do that is because he was a dope, but he wanted to make a name for himself, or she. Very rarely did females ever do something like that, but guys used to do that. It was an ego thing. Okay, so it's an inverse price. I just thought I'd mention it to you. But anyway, so where was I? So you're looking for reputable brokers. My broker basically offers me great prices, spreads, good commissions, but their charting packages is like horrible. It's it's like caveman drawings. So I have CQG. I'm sorry, take that back. I have TradingView. TradingView reminds me so much of Chicago Graphics, which is still in business. It's still very expensive. But I have TradingView for like, I don't know, $40 a month or something like that. It offers everything I need for charting. Really all I need is a price screen. That's all I need. I don't need really any studies or anything like that. But it offers an incredible ability to put things on there, and I don't use them. But anyway, that's my happy medium. I found a good commission structure, a good price structure, and I use TradingView. Okay, so let's talk about leverage, okay? And I'm just going to briefly touch on leverage because I'm going to do another video on leverage. And I don't really have much to say about leverage, but I'll just tell you, in the States, you're probably primarily going to get 50 to 1 in the United States, okay? And you can thank the Dodd-Frank bill, Barney Frank, and I don't remember the first name of the other senator, Dodd, that they came up with this bill that basically made it really difficult for brokers to do business in the United States. And many brokers, that the ones that are offering 200 to 1, 400 to 1, 100 to 1 overseas, do not do business with American clients because of the Dodd-Frank bill. Okay, basically, I read it as like Dodd-Frank was, that bill was saying that, you're too stupid to be able to manage your own money. We need to let you know that, it's risky stuff, but you're going to get 50 to 1 leverage in the United States. Forex.com offers 50 to 1. I think Interactive Brokers does 50 to 1. The only way that you're going to be able to get into an overseas broker is if you actually start a corporation in like the Cayman Islands or Panama or Belize, and you have a corporation that then goes and gets a brokerage account overseas, because now the European brokers no longer doing business with an American. They're doing business with a Cayman Island corporation or a Panamanian corporation or a Belize corporation, and they can do business with them. They can't do business with the American that owns the company. They can do business with the company because the company is an entity in itself. Now, I am not suggesting that you go and do this. You don't do it for any type of tax evasion principles. Nothing. I'm not saying anything like that. I'm just basically saying that if you want to get to that leverage, you need to then basically open up international corporation in the Cayman Islands, Belize, Panama, or wherever else, and that's going to be an expense. That's probably going to be $3,000-$5,000 just to open up that corporation. But if you really are hell bent on 200 to 1 and you want to deal with Dukas Copy overseas, which is a great broker, and also ICE, Intercontinental Exchange, and there's a lot of them that are really, really big brokers, and they offer big leverage. That's what you're going to have to do. Now, really leverage, if you're a newbie, 50 to 1 is plenty. Okay? I mean, you got to remember, leverage is a double-edged sword. Okay? Everybody has these dreams in their head like, wow, if I could get 200 to 1 and then I could put this trade on, well, that trade would have made me this. Or if I had, 300 to 1, I would have made this. If is the biggest word, the biggest, smallest word in the English language. We say on Wall Street, and if my grandmother had a pair of balls, I wouldn't be here. It wouldn't happen, right? So don't if yourself, okay? You need to know money management. You need to know risk control. That's what you need to understand. And please slam on the brakes in your head that you're going to go from wherever you are today to, $17 million in a year. You just got to put everything in perspective. Okay. Everything is relative. All right. You got to understand that if you're going to open up a conventional business, you're not going to see returns for 5 years. If you open up a deli, or if you open up a Jimmy John's or Dunkin' Donuts or McDonald's, you're not seeing any profits for 5 years. With Forex, you have the ability to see profits every day and control losses every day. So I'll talk to you about leverage in another video. I don't really want to get too much into it, because I really, in that video, we'll talk about leverage, but we'll also talk about money management systems that you could use to maximize leverage. And it's really all has to do with your risk appetite as a trader, and 50 to 1 is plenty. You don't need more than 51, because as you grow, as your account grows, you'll be able to trade more. So let's say if you start with 20,000, you could trade 50 to 1 until 20, and then when you go to 30,000, it's more, and 40,000, and 50, and 100,000. So what more do you need? I mean, it's just increasing as your account value increases. So you don't need 200 to 1 with $1,000 account. You're going to get wiped out. Again, it's statistics, and nobody's immune to statistics. So I hope that, the last point, unreputable brokers. What's an unreputable broker? Well, it's really simple. It falls in the same vein as, if it sounds too good to be true, it generally is. Okay, so you're out there and you're looking for a broker, and now as a U.S. citizen, you really shouldn't be able to do business with anybody overseas. They just don't do business with us because of the Dodd-Frank bill. But all of a sudden you see online, like, wow, I got Joe's brokerage in the Seychelles Islands that says they'll take American clients, and they offer 400 to 1 leverage, and they offer the lowest commission. Oh my goodness, that is fantastic. I'm going to go with Joe in the Seychelles Islands. So you go and give Joe your 10 grand. And, good luck trying to get your money back from Joe in the Seychelles Islands. You're going to get every excuse in the book, 4,000 different excuses of why they can't send you your money back. Now, if you happen to be lucky and win, and have wins, positive trades, and let's say you take your 10,000 to 15,000, 50% increase. Excellent job. Pat yourself on the back. And you say, you know what? I don't know. I'm not liking this guy, Joe, too much. I'm hearing some rumors. I want my money. So you're going to try to get your money out. And, again, you're going to get 4,000 excuses why they can't give it to you. All right. But then before you know it, they're going to close down and you're going to lose everything. Okay. And then next week, you're going to see an ad in the same area. You're going to get Allen's discount brokerage, Seychelles Islands, 500, 700 to 1 leverage, 0 commission. So stick to reputable brokers, ones that are regulated by the governing bodies of major countries like the NFA and the CFTC in the States, and overseas you got the FSA, you know, the ones that I mentioned. Okay, so basically that's all I got to say about brokers. I hope that this was an interesting little conversation for you. Please, if you want to learn more about trading systems and money management and philosophies, go to parkavenuetrading.com, sign up for the email list. You'll get a free gift, you know, 3 steps to avoid false breakouts. It's a great little book, cool, help you out if you trade breakouts and things like that, or pivot points or fib levels. You know, it's a nice little book to have as a reference to get good ideas from. Also, please like and subscribe this video. Look forward to seeing you on the other side and in the next video. Cheers.